Welcome to your Mortgage Insider Update for the first full week in March. We are kicking off the anticipation around the jobs number that comes out this Friday from the Bureau of Labor Statistics. Will be the next market moving event. The Fed will definitely be watching that as they are approaching their March meeting, where they've made it pretty clear there's not going to be any rate cuts, but there's certainly going to be talk about when they will cut rates. We won't know exactly what they say right away. What happens each time the Federal Reserve meets, they come out with their statement. The Fed chairman comes out, talks in front of the cameras, answers a bunch of questions. A couple weeks after that, we actually get the minutes from the report. And this whole month should be very interesting as we get more and more insights into how the Fed chairman, but as well as the other Fed members, they'll have speeches, they'll make off-the-cuff comments in front of reporters, but ultimately their discussion is going to come down to, is it going to be as early as May or more likely later in June before they actually start their official rate cuts? Markets pay attention to this because we will see mortgage rates drop in front of that. Before there's ever a change in the federal funds rate, we'll actually see the lower rates from our mortgage rate sheets coming out in anticipation of that. We saw that at the beginning of this year. We saw rates come down in January, early in February, and then they started bouncing back up in the back half of February, specifically because we found out that they were not going to likely be cutting rates because we started getting more and more information that came out, and the Fed speakers actually came out and said, hey, look, this isn't going to happen until we see better data. So the next couple of weeks, we'll be paying a lot of attention to that. Let's check out the charts and see where rates start this week. We start the week off with the 10-year Treasury up a little bit, but this is down from last week. So 4.22% is in the range as we see the 200-day average and the 25-day average are converging right here, creating a floor. We hit that on Friday, starting the day off in the same range as we were on Friday, slightly up for the day, but a far cry better than we were just back on the 23rd and 26th a week ago on rates overall, as the 10-year Treasury does indicate a drop in rates. One weekly survey that I will point out is the Freddie Mac Primary Mortgage Market Survey. This is something that's easily available online, and you can see last week on the 29th, every Thursday they post their Primary Mortgage Market Survey reporting a 6.94% rate, and you can actually see in their little chart here a little bit of a pickup over the last couple weeks. As I've just mentioned, back middle of January was kind of the lowest point for the year as far as the 15-year and 30-year mortgages. They ticked up, ticked down, but then they've pretty substantially come up. We're hoping as the Fed meeting comes to fruition here in this month that we could start to see this start to turn over if we get the right type of comments from the Federal Reserve that are likely going to see an end to their high rate environment. Even just the smallest hint of a cut, even a small 0.25% cut, will immediately pull back the available mortgage rates. So we'll keep an eye on that for you. So that'll do it for this week. We'll keep an eye on the Bureau of Labor Statistics this Friday. We'll come back with our newsletter next week. If you don't get the newsletter from us every single week, you can always subscribe to the YouTube page here, and we will keep you updated weekly on those short little videos and give you some insight into what's happening in the mortgage market. We try to share our newsletter as often as we can, but depending on who you are, you might not want to see it every single week. So the one way you can follow us is here on YouTube. So have a great one, and we'll talk to you soon.